Hi, this is Dan Stewart, and this is your NORAM Asset Management Market Update, Wednesday, December 15th, 2010. Well, the markets rolled over in the final hour to 2 hours of trading today. The Dow ended up down 19, the NASDAQ down 10.5, and the S&P down 6. And there's rioting heating up again in Europe. Therefore, the dollar strengthened. The dollar was up against all the major currencies. One would think that treasuries and bonds would be up in value, pushing their yields down. The safe haven, right? Well, productivity numbers came out strong in the United States, and therefore the story put out by Wall Street is that investors will demand a higher yield because of economic recovery is in full force, and therefore investors demand a higher yield. But that's not the real story. The real story is you have currency destruction, especially in the United States, and the tax extension got passed today. That means more printing of money and more borrowing by the U.S. government. Moody's has even threatened to a possible downgrade if the tax cuts do in fact get extended. Wait a minute, where was Moody's these past 2 years? Now they're finally waking up and becoming fiscally responsible? I find that a little hypocritical. But in any event, it is unusual for the dollar to strengthen and the treasuries to weaken. But I believe it's all due to the destruction of the dollar. And by the way, we're not the only ones. The European Union is going to have to come out with some more bailouts themselves. There is serious rioting in Greece and in England today. And it looks like Europe is going to be back on the front page. In fact, concerns about Spain is why Asia sold off, and China, more accurately Hong Kong, was down 2% today. Virtually all the Asian nations were down. And in Europe, Spain led the downdraft, down 1.5%. All eyes are on Spain. This has been Dan Stewart for your NORAM Asset Management Market Update, Wednesday, December 15th, 2010.